Welcome back, everybody. Thank you for coming back to the show, to the channel. I appreciate everyone. I want to let you guys know of a strategy that I picked up from Trading Tickers from Tim Grittani that isn't probably the best one out there, that I made a lot of mistakes on. And after talking with Grittani multiple times, if you follow Be the Trader, the podcast, the show, you know I've built a relationship with him over this time period. And he shared with me some things too about it. So I want to share that with you to make sure if you're bumping your head, on a wall like I was, that it's okay. There's a reason. So the strategy that I want to share with you, that if you watch Trading Tickers, that you probably have tried already and maybe haven't figured it out, and that's okay. If you have figured it out, please comment below. Please. If you haven't, comment below too. Let me know if you've been hitting your head like I have. But and if you have not seen the Trading Tickers course review that I did, make sure to click on that. It'll be somewhere up here or it'll be in the description to watch a review on that DVD. But this is a strategy called shorting into daily resistance. I know if you have seen this course, you probably have seen this setup. It looks very easy, where all you have to do is find a major daily resistance on the daily chart. One time when the stock ran from like $1 to like $8 with massive volume, right? Massive volume. That's very important. And then topped out and just crapped, right? And then, weeks go by, days, maybe months, and then it spikes again out of nowhere. And it comes back up to that $8 level. Well, this strategy says to short, risking off that level. And I'm going to show some examples of different charts just so you can get a picture of what I mean. But usually, for me, when I started shorting and risking off that level, I got stopped at a lot. And I was wrong a lot. And I traded it for a long time because I thought I was good at it. And until I started tracking it over and over, I started to realize that, man, I'm break even at best. I was like, I just need to get rid of this strategy. And so I did. And then I started watching it again. And I was like, you know what? Usually it's very random. Sometimes they stop, at $5, way before the $8 level. And then it goes down. Sometimes it stops at $8 and then goes down. Sometimes it goes above $8 to $9 and then craps out. They typically do crap out, but how they do it was not very like the DVD showed, right? It wasn't very clean. And that had me questioning that strategy itself. And so I got rid of it. And then I built a relationship with Tim. And Tim Grittani, if you're watching this, first off, I don't know why you would be, because you know how to trade. But if you are, thanks, man. Thanks for the help. I brought this up to him one day after interviewing him. And if you haven't watched that interview, make sure to watch that. But I was like, look, Tim, there's times where there's just one strategy I just could not get my head around, at least the way you showed it on the DVD. And he was saying, you know what, man, when I did make that course, that was one strategy that, I felt good about at the time, but now it's just not like the strategy for him. He if I remember correctly, and he can comment below, let me know if I'm incorrect, but he was saying that it wasn't really a strategy he does anymore because it's not very consistent for him, and it's very aggravating, right? It's not always the same. And I think that's right. I mean, if you've been trying this strategy, you probably feel that way. And I think, for myself, I still watch it. And I'm very curious if you've been watching it or if you're having success with it. Please comment below and let me know, because I'd love to know how you go about it. And also, one thing that I've noticed is you got to be very, very patient with that strategy. So I'm still watching it, and I noticed that, like I said earlier, they could stop out at 5 when the risk resistance is at 8, or they could stop out at 7 or stop out at 9, and then come down. So it seems like the key is you need to wait for a significant trigger, not just the daily resistance. Daily resistance is more of a guide, whereas you still need a trigger. Now that trigger can be multiple things. It can be a trend line, a major trend line break, right? Meaning it held a trend for a significant amount of time. or it could mean that a major death candle.
Death to all, and all to death.
What is a death candle? A death candle is a candle that kills the stock. It's a massive red candle with massive volume. And what is massive? Well, that's relative to what you've seen prior in volume. Those are signs that you may want to see before you start shorting it, because I have noticed that they do end up going down, but they don't go down very smooth. They're very choppy, or they can fake you out a lot. So I'm very curious, if you're trading it right now and you're doing well, great. Share with me, let me know what you've learned from it. If you're not doing well, comment below and let me know, and like, oh my God, thank you so much for pointing this out, because I got rid of the strategy and it helped me a lot, because it was like, you know, when you're working on consistency, you need to eliminate the ones that you lose on. That was one for me. With all that being said, if you enjoyed this video, please comment below. Let me know that too. Subscribe, hit that thumbs up button, and hit the bell, because if you hit the bell, you'll be notified for more videos coming soon. Thanks.